weekend all. Ira Epstein with your financial market wrap-up, and this wrap-up is for Friday, and we're at the 17th of March, 2023. Weekend, so it doesn't matter what time it is. Wow. When you look at the charts, the chart action on weekly charts doesn't look that strange. I am worn out, as are all the pros that I know. And that's because the intraday, the day-to-day swings have been monstrous in size, and we don't quite know what's going on. Going home, this is my take on it. Gold up $50 on the day, but the later trades, remember, they settled the market at 12:30. The trades were closer to the highs, over $2,000 an ounce going home. The Japanese yen was up 106 points. These aren't small moves. You were up 2.5 points in the bond, well, 2 and 4/32 in the bonds, up 1 and 20/32 in the 10-year note. Energy market's down. So what the market is the market's scared. The market's scared the world's tipping. And what do I mean by that? The financial markets are tipping over. You know, this whole thing isn't just isolated to the United States. We saw problems in Switzerland. I don't think that we're out of the issue yet in the United States. I'm always scared of what we don't know. And that's the part that's got me. And I do appreciate that 11 banks gave money to First Republic, but again, it's for 120 days. It's money they just got in mass from other banks, people yanking money out. They're going to earn interest on that money, and it's not a capital infusion. I guess what it does is it gives enough capital, well, not capital, enough things that the bank can take to the Fed window to get cash, and if everybody wants their money, they have $30 billion more they can take to the window, get what they have to on it, and work with that. So it's a backstop, but it is not a capital infusion. You don't see UBS wanting to take over Credit Suisse. I don't think that's going to be the case. I fully expect that Fed Chair Powell will go with the quarter-point hike unless there's another big banking event that takes place anytime over the weekend into Wednesday. And that's when we're going to get his announcement. Then we'll see what the Bank of England wants to do right after that. There's just a whole raft of things. And remember, you haven't heard from any Fed member because this is the blackout period. So what I think is people loaded up with protection going into the weekend. We'll see what happens from there. When I take a look at the E-mini S&P on a monthly chart, the market's under the 18-week average, so my barometer says there's a downside bias, and it's been in place since 2022. It hasn't gone away. On the weekly chart, we were down, up, came back to neutral, went up, came back, fought for neutral, and now we're down, but we're trying to get up and challenge the 39.89 level, and that would be the neutral number on the weekly chart. When we look at the chart itself, I'm enamored with the outside week down. That's a continuation pattern unless that high is taken out within the week after it's generated or the week after that. So you could still knock it out this week, but typically it's a continuation pattern. The market's got lower highs, lower lows. The battleground's very clear to me, at least. It's the red line, the 18-week average of closes. Here's the 100-week. Here's the 200-week. If the market lets go to the downside, this is a big moving average that you'll hear trader upon trader talking about on TV. Right now, the battleground's that 18-week average, and you have sideways Bollinger Bands. So they're just going like this, and the market's whipping back and forth within them. It's always very dangerous when that happens, and momentum is down and not oversold. So as I see the chart, the pros are bearish. They'll probably defend that position around the 39.89 zone. If you get over the last high up here, and we can take a look at that high was last week's high of 40.82.5. If you get over that, you negate the downtrend. And if an event happens, you go back. Now, if you look at this week's low at 38.0875, it hit the lower Bollinger Band. I think the pros took money off the table already, and as the market's coming up, they have to decide, do they want to sell it again? But what I teach in my enhanced Bollinger Band course is that the first time you hit a Bollinger Band, you do something. It depends if you're embedded or not embedded, what you do. I teach it in the course. I'm not giving it to you here. Now, before I go too far with all this, I'm going to ask a favor of you. I put a lot of effort into these day after day for you. If you like what I do, be kind enough to hit thumbs up. You can always subscribe too. It's very simple to do it here on YouTube, and you'll get notice when they come out. But I do appreciate that. It helps us with the algorithms. In the Dow, the trend is down, the bias is down, you're in oversold territory, you've hit and you're running the lower Bollinger Band. I teach traders not to sell the lower Bollinger Band. That's where you take money off a table, not where you add money to it. The market that came alive this week, up 6.37%, up 754 points, is the one that doesn't have anything to do with the financial arena, so to speak. It's not part of the banking community. Nothing what's in here. It's more the tech. And that went, and the resistance is 12,832. The support has been, and it continues to be, the 18-week average of closes in red, and right under it, the 100 weeks. So those have been the numbers that the market, I'm sorry, did I say 100? Right here, that's the grade, the 200 week, the 11,733. One of the resistance numbers is the 100, way up there on the chart. In the Russell, this is the zone to be coming out of shorts, not putting them on. First challenge of a Bollinger Band. Trend down, bias down, and you get down there, you hit 1715, that number's 171210. So you're in the ballpark of that number, I think you'd agree, and I think the pros did some of that. I don't know how many people went home with big positions over this weekend. It is a dangerous weekend because we don't know if another shoe is going to drop in the financial world somewhere in a banking. I mean, they just come out of nowhere. When we look at the bonds, you still have lower highs, lower lows. I think you'll stay range bound in the upper and lower Bollinger Band because I don't think there'll be any surprises here. The good news is we are seeing interest rates fall everywhere. And I mean everywhere. Anything to do with a 20-year, a 10-year, a 2-year. No, it doesn't matter what you're in. They are coming down, and they've come down large. I was on here 2 weeks ago saying to you, we're at 5%, guys, in the 6-month, and we're at 5% in the 2-year note. What are you playing for? And I was arguing about gold. They said, why would I want to own gold? I remember saying it when I can make 5% on my money. By not owning anything, and that's pretty good. You're pretty close to what the inflation number supposedly is. I think it's a little higher than that, but that's what it was. Okay. Well, gold certainly came alive, and gold did not leave people at the altar, but we'll talk about that in the gold video. In any case, I look for the market to meander back and forth here. In the 10-year notes, I look for solid resistance just over the 116 level. You had a short covering opportunity 3 weeks ago. If you've taken the enhanced Bollinger Band course again, when you look at this, when you click that, when you hit it, that's where you're evacuating your position. Now, the question is, are you taking it all off? Are you taking off partial? I teach it in the enhanced course. When we go to the dollar index, this is bad news. Now, let me show why. I don't know if you understand outside days, but if you do, when a market has an outside week up or an outside day up, you take out the prior week's low and high. You did that in this case. 104.02 was the low. I know it doesn't necessarily look like that, but as we come back together, the low of this week was 104.04 and a half. So you can see it took out the low, then the high. If that low is taken out, it's a sign that the continuation pattern's a failure. That's exactly what happened. Where could the market go? Well, it would be a classic case for me to say it's going down here if it weren't happening right on the 18-week average of closes, but it did. I'm still bearish. You'd have to get back over last week's high to tell me anything different. I think the pros now think the market is going to go to the downside. In the eurocurrency, the battleground has been and continues to be the 18-week average of closes. I think you're going to get caught in narrow bands right here temporarily. I think the markets are looking now to say, okay, we know what Miss Lagarde is doing. She did pivot this week. She beautifully gave the playbook, handed it off to Fed Chair Powell, said central banks don't have to be involved in the politics of the countries. I think that works real well. And as a banker, your goal, what's your mandate? His mandate is inflation and full employment. He hasn't beaten inflation. He's got his employment. Continue to fight that. That's what you should do. Obviously, prudence will take hold if another bank failure comes about or something like that. Barring that, I don't see how he doesn't go at least a quarter point. The word is at least. I think that's what it'll be. In the Canadian dollar, you have momentum down, but you're oversold. Last week, you hit the Bollinger Band. You've bounced away from it, as you typically do. The resistance will be the 18-week average. It's not an exciting market because it's oversold. In the Japanese yen, I can tell you two things. Number one, they raised the wages. What they're doing is they're normalizing their monetary policies. Wages went up like 3%. The unions were given this, and it's greater than the 2.3% they wanted. And this is going to give the brand new head of the bank in April the leeway he needs to gradually get away from this deep policy they've had, one of the few in the world, to create inflation forever and ever and ever. Eventually, he'll start fighting it. And now that wages are going up, he's got his beginning. Remember, the inflation in Japan is nothing like that in the United States. In Bitcoin, wow, Bitcoin responded. I mean, whether you like it or not, it did its job. Do I think professional money was coming out in the first challenge of the 200-week in the upper Bollinger Band together? Absolutely. I know you'll tell me, Ira, it's going to keep running, and I'm going to remind you, when you're buying over that, go to Las Vegas. What do you think they built the strips on? You guys that keep betting that you're going to stay under or over those bands for lengthy periods of time. It ain't going to happen. Then we get to Joe Biden country. And Joe, are you listening? What you should have been doing and still be doing is you should be buying our oil back. Don't worry about that you get the low and it's going lower. Don't let your people do that to you. Just get a policy and you keep buying it on the way down. Then, at what point do they decide, okay, we pause a little bit? I don't think you do that till you give us back our oil. Pretty simple. WTI right here. Now, I know from my work, it's saying that if you don't get something else, another event, you're probably going to get a bounce here. I get it. But the trend is down. The bias is down. It is the first challenge of the Bollinger Band and the 200-day average together. Buy the oil, Joe. It's not going to keep staying there indefinitely. It's down like this hard because of this banking crisis, and it's got people thinking that all economies are going to roll over, that this thing's contagious and that people are going to hunker in and they're not going to do things. Like every other event in the market, they come and they go. Remember that. And in gasoline, for the weekly chart action, this is perfect. Okay, all you did is you got up to where I think the pros liquidated. Now you're back into support at 242. I'd like to see it work here a little bit. I'd like to see the market get away, if you will, and it's done it from being overbought, but further down in that. Doesn't have to break any further. I think you're basing out for your summer, spring move in this particular market. Now, one of the things you hear me talk about consistently are the Bollinger Bands, and I'm pointing out to you what is going on. Do you know how to work with them? Do you know how to do this yourself? I have a course. You get charting software. You get all the videos. You get access to my morning spider and ETF videos for 2 weeks with it. The course is inexpensive, and I think you're going to learn something. So how do you get to the course? Real simple. Just move your cursor up to the top here. Got it? You'll see an icon. It'll take you there, or you can watch this, tell you something about it right at the end of this, but you're still going to have to go to the website, iraepstein.com, and at the site, you want to go to the word education, because that's what it's all about. I'm Ira. You have a great weekend. Good talking to you. I need some sleep this weekend. Take care. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.